What's up, legends? Bitcoin touched on 30K today, and I feel like it's time for some celebratory music. Guys, this is going to be a quick one today because my laptop is dying and my child is watching her videos in the bathroom waiting for me to finish this. So let's get this done. I want to talk about an update from what we were talking about on yesterday's video, where we talked about this consolidation that was happening here, that there were trapped traders in this candle here, and that we had Binance long orders at 28,200. So let's get into this really quickly and talk about what actually happened from there. In yesterday's video, I will link it above if you want to watch, but I was saying, as price was in this area right here, that I wanted to see if this move to the upside was fake move week beginning. And in order for me to believe that it was, and that things were going to reverse from that point onwards, I wanted to see price come back into this trapped trader zone and then give me weakness. If that were to happen, it would have then given me an M formation. And I did talk in that video about how we only had 2 rises beforehand. So that wasn't great because usually we want to get the third. However, we had our W from this fake move here that happened on the weekend, or not fake move, but it was a stop hunt that stopped out the long traders here who had their stop losses just below support before price shifted out rather quickly. Then we were stuck in this consolidation zone, and we identified that there were some pretty large level longs at 28,200. So here on this very red candle right here, you can see that that is exactly where price wicked to pick up those orders, and then we shifted out. So at that point in time, because over here price did not return into the trap trader zone, there wasn't an M formation, so there was not a reason to short. That made this whole area here from this wick to here simply just a retracement. And naturally then, following that retracement, once we got into the buy zone and tested the 200 EMA as well as those Binance longs that were sitting there, we then shot through and to the upside. Now, I don't know if more orders built after I had done that update because I wasn't actually watching it at the time. So I'm not sure about that, but it's a fast shift out. So I would imagine that more orders built than what I had noted on that video at the time because it was just too much. So now we know that that move has happened. That trap trader zone is gone. So the next thing then was this area here, which was the higher time frame where price was hitting on multiple times that I'd noticed noted that we needed to break next, as well as multiple touches down here. Now, what we ended up getting here, right where this little finger is, was we got the higher low, which is the hint that price was going to break to the upside. So when you have a ascending triangle like this and you have at least 3 touches, but usually it's only 3. That one should be there. But when you have these 3 touches and you continue to have higher lows, you wait for the hint of which way it's going to break out. And the hint comes with a higher low after the 3rd touch is the hint we're going to break to the upside, but a lower high after the 3rd touch is the hint we're going to break to the downside. So we got it right there. And that again just added to the trigger, but that was also part of the weekend trap. Now, we also then smashed right through and took out this very high liquidation liquidation level at 29K, which I was saying it kind of doesn't make sense that they won't come for it, but you know, sometimes the market maker just doesn't make sense. So I didn't really think it was a guaranteed thing that they were going to come for it, but they did in the end. And the interesting thing about this is look exactly where this wick has stopped right now. This is the 50% line on the weekly, and I'm going to show you exactly what I'm talking about when I say that. So if I zoom out to the weekly time frame, see here this red vector candle, this is the next vector candle on the weekly time frame that is unrecovered. And when I draw the fibs from the bottom of that wick to the top and mark out the 50% line right there, that's exactly where they stopped. So when you have a vector, usually the bottom of it, if we're in an uptrend, the bottom of it is the first target, the middle of it is the second, and the top of it is the third. And at each one of those, you are waiting for signs of potential reversal, meaning that price cannot get any further. So it's interesting that we've wicked right on that 50% line when it comes to the weekly. Now I'm going to go back down to the 15-minute time frame. So now that we've smashed out that 29K liquidation level, we can start to get rid of some of these things that have already happened. And now we want to look to what is next. So we do have the next level here at 30,550, which we just were shy of in this candle right here. And now we seem to be consolidating. This has the potential to be a formation that is called a trapping volume formation. And what happens is they spike the high after doing their extended moves to the upside, which we've definitely had. And then they do not come back for the second side of an M. What they do instead is consolidate, and they never return to that candle. So I would keep an eye out on that because it is a reversal pattern. However, because we have been so bullish, I would not be shorting anything unless we broke and retested the 50 EMA, at least on the 15-minute time frame. But to be more conservative, the 1 hour is going to be better, but just depends on how aggressive you are as a trader. But keep an eye out on this for the potential of it being a trapping volume formation, which is literally how it sounds. It has trapped the volume in this candle and it's not returning there at all because it's not releasing anyone in that candle. On the other side of that, this could just also be a consolidation before another breakout to the upside, because there is still some liquidity up here at 30,500. And if we do break that, the next one is at 33,350. So not saying down from here, but I am saying that we do have this formation currently playing out, and what's going to invalidate that being the trapping volume formation is if price does return into this zone. So looks like it's created a bit of resistance here at around 30,150. If it can't get back up in there, then know that it's a trapping volume formation. Wait for it to break the 50 EMA. If it can get back up in there, it's likely coming for these higher liquidation levels. Now let's just have a very quick look at that, because these are the levels that I'm talking about up here that have turned white. Let me zoom in on that. Turned yellow, I should say. So that's the 30,550 right there, which is the next one closest to price. And then this one up here, you know, it's not significantly high yet. I'm not really sure if it's, you know, going to be worth the market maker's time, but have a look at how much yellow is starting to build below price. Eventually they're going to come back for this. Whether they come back for it as a retracement or a reversal is yet to be seen, but eventually they'll come back for it. And this one here is just, it's way too significant. And yeah, it's just a matter of time. And that price is at 27,450. And back on the chart, that level is all the way down here. So it would be taking back all the good work that we have just done if we were to come for that. Now, that liquidity might lighten up if people take profits. So that, again, that is something that we have to keep an eye on. Now, I want to have a very quick look also at the current limit orders to see what's going on. Don't have much interest above price trying to short right now. That's interesting. We do have people wanting to buy off a retracement down at 28,500. You know, who knows? They might be dreaming, but it's there. So just note that it's there for now. But yeah, it's looking pretty empty at this point in time. As I'm filming this, there is 1 hour to the UK close, which makes it currently about to be 8 a.m. New York. 8 a.m. New York time is when we expect an extension in the UK session. That extension is simply the UK market maker taking profits. So at any moment now, we might see some bit of a movement, and that movement usually leads into what the US is going to do next. So yeah, I got to get this video out so that you guys can get this in time, but there may be something that happens in the next hour if in fact the US want to reverse this. That would be why the UK has gone sideways for the whole session, creating that trapping volume formation. So you guys know what to do. Don't make moves unless we break and retest the 50 EMA. And if we come back into this trap trader zone, it's likely that we're going to go up for the higher liquidation levels. Hope you enjoyed this video. If you did, be sure to smash that like button, hit subscribe. If you're not already subscribed, leave me a comment below, and don't forget to check out the links in the description of this video if you want to A, learn this style, or B, if you want to trade on my favorite exchange, which is OKX. There is also a link in there to get you 15% discount off your trading fees, which definitely add up over time. Have an amazing day, and I'll see you soon.